Get unlimited access to all of our CPE courses at www.teachucomp.com/unlimited CPE.
In this lesson, we'll take a look at review questions 13 through 15. Let's begin with review question number 13. Josephine owns a small home that she uses as a residential rental property. In January 2012, Josephine signed a lease with a new tenant, Roy. Roy recently became a widower and agreed to pay higher rent if Josephine would provide services for him. Josephine now provides cooking, cleaning, and laundry services to Roy several times each week. When filing her 2012 taxes, which form should Josephine use to report her rental income? A. Schedule E, B. Schedule C, C. Form 1099, or D. Form 4652. The answer is B. If Josephine provides substantial services to her tenant, she should report her rental income using Schedule C, profit or loss from business. Let's take a look at review question number 14. For the purposes of determining passive activity limits, which of the following people would be considered a real estate professional? A. An elementary school teacher who works full-time during the summer months on a construction team. B. An architect who works year-round on nonprofit urban development. C. A full-time secretary in a real estate office. Or D. An individual who owns a single-family home used as a rental property. The answer is B. An architect working full-time on a nonprofit urban redevelopment would qualify as a real estate professional. Now let's take a look at review question number 15. Joe owns a home in Springfield, Kansas that he uses as a residential rental property. In May 2012, a tornado destroyed many homes in Springfield, including the home that Joe owned. The town of Springfield was declared a disaster area, and Joe received money from both his insurance company and FEMA. The total amount of money that Joe received was greater than Joe's adjusted basis in the property. In order to defer paying taxes on the gain, Joe decided to postpone reporting the gain. Under these circumstances, how long does Joe have to replace his property after his gain is realized? A. 1 year. B. 2 years. C. 5 years. Or D. Joe cannot postpone reporting this gain. The answer is C. If Joe's property is located in a disaster area, the replacement period is generally 5 years.
Like what you see? Get unlimited access to all of our CPE courses at www.teachucomp.com/unlimited CPE.